Eric, good morning and thank you for your time. Day trading kicks off today as per the guidelines issued by the Nairobi Securities Exchange. Let's start from here. Within the context of the products being rolled out by the market, we've seen ETFs come on board, we've seen an quoted securities platform, we've seen rates come on board. We even now have securities lending and borrowing. How do you assess the day trading within that context?
I think it's just an additional toolbox for the NSE and really just providing investors with additional variety of that ability to trade in the market. I think there's a sense that it could even bring in new types of investors who are really keen on being able to trade a lot more quickly. And that makes a lot of sense. It was quite a bit of effort, I would imagine, from a technological perspective. But certainly, I think it's something that market actors welcome. There are quite a bit of additional measures that might need to be taken to really get the product working efficiently. But I think just having it in place really reduces significant barriers.
Good starting point there. Let's go to my second point. If you read the guidelines coming in from the exchange, to incentivize the uptake of this, they offered a discount on the second leg of the transaction, which is at 0.114% compared to the standard 0.12%. You know, I looked at it and thought, I mean, really, is this the best that the exchange could offer? So what's really the difference? And really, would this now serve as an incentive? What are your thoughts?
So the issue of fees is actually a lot more complicated than what the NSE has offered. But I think it does just provide a bit of background as to what could eventually transpire. So the 0.12% is what the NSE charges when a trader does a trade. So there's usually probably a 2% charge, depending on what type of investor you are. And you would have 0.12% charge out of that portion going to the NSE. But in total, what the regulator, maybe the CMA and other charges come to, it's usually 0.34%. So essentially, what the NSE has offered is a portion of that, the 0.12%, and it's on the second leg of the transaction. So if you do one trade, in the afternoon, you do another trade to reverse that initial transaction, then that second leg of the transaction, you have the lower charge. But I think there's also the brokerage charge that market actors such as ourselves need to sit down and decide how do we structure it to ensure that it's optimal. Do you have a subscription model for day traders? Do you have, for example, a lower rate for day traders? Because at the end of the day as well, if you look at the income statements for the brokers, we've seen, they're really not making money per se. There's really been a big challenge for them. So a lot of thought around how the charges are going to go. And it may well be an issue of trying to see whether the volumes will be sufficient enough to compensate for the sacrifice in charges. So that's an area which I think will be an important bottleneck as we start day trading today.
I like the issue you brought about volumes, because one of the issues I'm grappling with, Eric, is this. When you look at the liquidity levels of the market, do you feel that we are at the point where day trading could actually be a key driver of participation in this market? And why I'm asking this is because there are a number of counters which are by design quite illiquid. And it's because, of course, players like pension funds are holding them for the long term, hoping for dividend payouts, etc. But really, from a liquidity standpoint, because day trading needs very quick execution in terms of entry and exit, do you feel the market is at a place where it would actually catalyze this sort of product?
I think if you look at day trading in the context of other products which have been introduced, then it makes a lot of sense. Because you have securities lending and borrowing, which is now in place. So it means as a day trader, potentially you can also look at that element. There's issues around margin, although the margin at the end of the day is cash covered. But if you look at the total number of products which have been introduced, and as an investor, there could be new investors coming into place. And these additional tools would enable some of these stocks which would otherwise be liquid to potentially become a little bit more liquid. So there's looking at day trading in the context of the other products, so especially securities lending and borrowing, as well as the derivatives and so forth. So that would potentially make it quite an important addition to really get this entire segment working. And in any case, it also helps with price discovery, just having better, lower volatility during the day. So I think we are better off having it than not, and then just work out the volumes and try and see how it actually works over the long term. I think in Africa, we are really taking the Kenyan market, to a new level in terms of the creativity and the ability of what can be done. I think another element is just to try and see how can you get more companies listed in the market. So there are a number of items that need to work out, but I think from a technological perspective, having it working really makes a lot of sense.
Let me walk back to the issue of the discount on the second leg of transaction, because I was trying to make sense of it, and part of me thought that, look, this could be NSE trying to preserve its revenue streams, because I mean, the larger the discount it offers, the more impact it has in terms of its performance as an entity, as the NSE itself. But then the second thing is, have brokers such as yourselves at SIB received any guidance from either CMA or NSE as far as fees are going regarding day trading?
Yes, so there's been collaboration, especially around the systems upgrade to get it working. And of course, the notification around the timing of the start, so today, and the support around, if there are challenges, how do we go about it? So that has already been covered by the market actors, and all this was really a collaboration to get it going. So the level, especially around the business element, I think that's for each individual broker to decide, if it's brokerage charges, how do they structure that? Do they leave them as they are? Or and that's an individual brokerage division that they would have to make a decision based on the volumes they see.
Eric, if you look at the guidelines from the NSE regarding day trading, there are two. There's either the non-leverage or the leverage. Let's talk about the leverage for a while. And my question there is to what level do you think the brokerage community, including SIB, is prepared for this? And why I'm asking that is because providing that leverage, and then if you consider the state of the brokerage market in this country, we've seen consolidation, we've seen mergers. Clearly, people are a bit cash-strapped, if I could say. They are really trying to ensure their sustainability is retained. How would that work exactly?
Well, I think it's an area which is a big challenge, and my sense is that, and not to say that margin trading will not have a very robust momentum, but if you look at the structure of charges, obviously we're not going to see large volumes starting from day one. So there'll be a bit of, just like all new products that we've seen being launched, there'll be an element of, an initial, probably symbolic trading. And then we'll look at it as some of the players come in. I think the issues around consolidation of the brokers or having brokers introducing new products, incorporating technology in whatever they're doing, is really to manage, to be able to manage to survive in the new world, and we are seeing a lot of effort around that. For example, I mean, for us, we got a money manager license, and that allows us to trade global instruments and allow our investors to do that, and that's a product which has done really well. We've not had any other player in the market getting into that space, but it tells you that brokers and investment banks are not really sitting on their laurels. They're really trying to see, how can they become a little bit more innovative to be able to serve the market better.
I think maybe just allow me to push further that actually, then the question I was asking in more crystal sense was how would that leverage then be structured once it is rolling out? Granted, the NSE has told us the leverage transactions will not kick off immediately. We are starting with the non-leverage.
Yeah. Yeah, and even the leverage one, at the end of the day, you still need an element of covering it almost in full. But yeah, I think, and that's the essence. It will be a bit tough to really do a lot at the very initial phase. But having that ability to trade on a day basis is important, because you only, at the end of the day, you only settle your net exposure. So if somebody doesn't have a lot of resources, you'll try and buy and sell during the trading session, so that at the end of the day, you hope that you'll end up with a profit, and so no exposure or nothing much to settle at the end of the day. So that in a day, once you have this day trading, that really helps, even without the leverage, that you can actually trade a large position, as long as you're able to offset it before the end of the trading session.
Eric, as we close, in our analysis of other markets where day trading takes place, we all know there's the provision of stop loss orders, where if, let's say, SIB is dealing for me, then I tell SIB, if counter X plunges below this percentage point, I want you to exit. And do we have that provision in our context? And how do you see the ease of an exit in the event that now a counter is rolling down faster than an investor would have expected?
Well, so that introduces another element, especially around market makers, so that, for example, if you have any trade, for example, for every trade that, for example, if you have a market maker, what happens is that you have both a buy and a sell position. So market makers would be able to quote both buy and sell positions for every stock. And what that would do is to really enable, such things to be executed a lot more easily. Otherwise, in this scenario, in the current scenario, it means you are really hoping that you have an offsetting transaction in the market. And therefore, of course, it means whoever is trading, they would have to pick their stocks carefully, which are liquid enough in order to have an offsetting transaction before the end of the trading session. But in an ideal scenario, if you have market makers, then they'll be obliged to quote two-way pricing, and that would be that could actually even be automated, and that would allow the whole functioning to work a lot better. I think it's a step nearer, but we are still not completely there. But I think it's just building up on the momentum.
Eric, one of the things which has been hyped around day trading is that you see all the activity which goes into betting. We are now trying to bring it more into the formal capital market structured platforms. Do you expect to see any traction coming from that side into the day trading space?
Obviously, the younger demographics appear to be more interested in quicker type of returns, and obviously this are a bit more endearing to them, and we think there's a portion of that demographics that would be interested in this type of product. Whether it would have the same level of momentum is yet to be seen, but I think the younger demographics is keen on using technologies. They're keen on getting sort of instant gratification. So I think the momentum is there to try and be able to tap into these new trends, and hopefully we get at least a portion of that betting market, looking at the stock market.
Final question, Eric. NSE
Yes.
and the capital markets at large in Kenya have been relatively aggressive in terms of rolling out new products. The question has always been on the uptake, when rates came, when derivatives came, and a few other products. What do you expect in terms of uptake when it comes to day trading?
Uptake is always a big challenge. There's an element that could be regulatory led. and there's an element which is the market. And I think there's an element of the market that has been concerned. I think that's why even for the new products now, apart from rolling out too many products and having regulations around them, they introduced the regulatory sandbox to try and minimize just having too many regulations out there on products whose uptake really becomes dismal. And so, but of course, for a product like day trading, it's almost a standard in many markets. And so it makes sense to roll it out. The level of sophistication, the systems upgrade, I think that those are things which could be worked out and improved over time. But I think that's a standard product that we will just need a bit of tweaking to get it working. So the uptake, I suspect, until we completely have everything worked out, we'll probably still have the same challenge as some of the other products. But you never know. I think it's when you get to the market that you really know for sure that you're going to have success or not. But I'm pretty confident that if the charges are addressed, some sort of pricing mechanism, I think there's an element that we could see some innovations being triggered with this upgrade.